Hello and welcome to another update video about FET. Situation on the FET chart has pretty much not changed. So it's still a bullish structure in which we can look for higher prices into the $7, $8, $12 region. Yeah, this is sort of a cluster of Fibonacci targets and projections up there, as long as the $1.61 support level is holding. So what we need to avoid in this current price structure to keep the white wave count, which is the more aggressively bullish scenario, to keep this one alive, we need to see the price hold above $1.61. This is, for any pullback that's happening now, really the critical level. The reason is that anything below the 78.6 retracement level cannot really be in a reasonable way interpreted as a wave 2 pullback. And the idea is that from this swing low here on the 5th of March, that we had a wave 1 to the upside and a wave 2 pullback could be unfolding right now, which is a corrective pullback that corrects the previous 5-wave advance, which suggests that the trend is to the upside. So any 5-wave move to the upside needs to be corrected. That correction could happen right now in wave 2. And wave 2 typically targets the 38.2 retracement down to the 78.6 retracement, if the assumption is correct. I mean, I cannot guarantee you that this is a wave 2. Micro counting on altcoin charts is always a little bit of a challenge, especially here on this chart, in which, well, we haven't really seen any deep pullbacks. I mean, the deepest pullback most recently was this dip here on the 5th of March, but was it really any convincing wave 2? No. The idea here was as well that we had a 5-wave pattern to the upside into the 3rd of March highs, then this as a wave 2 pullback. But again, yes, sort of deep, at least compared to what happened before, but overall still extremely shallow. Nothing reliable, to be honest. But my best interpretation I can offer is that this is a wave 1, this is a wave 2 pullback, and then this is another 1-2 setup actually, which could then result in a 3rd wave to the upside, then another 4th wave correction and a 5th wave. That's sort of what I'm tracking. Let's talk about the alternative wave count as well. What happens if we break below $1.61? It's far away now, that level. Tells you a lot about the risk. Well, if we break below $1.61, I have to assume that the entire advance was a 5-wave move. It would probably then be possible in some kind of a diagonal pattern, not a preferred interpretation, therefore labeled as alternative. But that would allow for a deeper pullback in wave 2. That would be a more bearish, but overall still bullish scenario, which would probably enable traders and investors to find lower entries in an overall uptrend, basically buying a deep pullback in an overall uptrend. But first of all, as long as we are not even close to, or as long as we haven't even reached the white, the support zone for the white wave 2 pullback, there is absolutely no reason to assume that the yellow count is playing out. You know, we go with the trend as long as it's running, and we follow the count that works and the interpretation as long as it's valid. There's no need to change really anything there. So therefore, I think it's worth being focused on the upside still. And obviously the idea is that in a 3rd wave rally, we should see the price go much higher to, as I said, minimally $7.26, ideally $8.85 plus. Zooming into the microstructure here, you can see that, yeah, possibly a correction has started. At least it looks a bit like a corrective pattern here. Some overlapping price action there, not impulsive to the downside. That basically is suggestive of further upside. The orange box is not really a target. I mean, yes, sort of. Typically these boxes are reached. But I have to say 2 things. First of all, in a bullish market, pullbacks tend to be shallow. So sometimes these support areas are not reached, especially in a bullish market. They are only support, okay? In addition to that, I'm not very confident about the micro count. The best explanation here would be to just assume that these are boxes. They help us. First of all, if the price offers a deep pullback, they can be amazing opportunities. Until then, they are just the levels to watch in case we get a deep pullback. And as long as we're holding above the box, the trend is still up and the overall projection to the upside remains the forecast. Okay, so we expect higher prices in an overall uptrend. This is a level, these levels give you your risk. If the pullback is deep, then they can be an opportunity. Okay, So yeah, that's basically what we're tracking. Next resistance above is $3.04, yeah, and then $3.82. Above $3.04, another deep wave 2 pullback will become less likely. Above $3.82, I will take the potential for a deep wave 2 pullback off the chart at all, because then we are breaking above a level that, yeah, basically then this wave 1, okay, will get too long. And we would then already assume we are already in a third of a third wave, and maybe this wave 2 was extremely shallow. That can all happen. I mean, this was extremely shallow. We didn't even reach the 23.6 FIB level in that pullback. So that's all the stuff that can happen in a, oh, we did reach the 23.6, but that's it, you know. By the way, that 23.6 FIB level here on the FET chart would be $2.55. So the first Fibonacci support is at $2.55, just in case we get another extremely shallow pullback. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.